You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everyone. Welcome to the Infinite Banking Mastery Podcast. Once again, thank you for being here. Thank you for listening in. Thank you for sharing. Today, I wanted to go over a few of the uses of IBC. Now, there are lots of uses of IBC, and I'm quite sure you can think of some things that are not going to be on this list, but I wanted to just go over some of those things. I've said some of these things here and there throughout different podcasts, but I thought I would do one and kind of shine a light on some of the main uses. Primary reason, which I've mentioned many, many times, protection. Of course, people buy whole life insurance or have a whole life policy or infinite banking. One of the bonuses is the protection it comes with to protect your family from if something happens to you or when something does eventually happen to you, because of course, that is one of life's guarantees, but also the riders that can help you in the event of a chronic, critical, or terminal illness. Another of the major primary uses or reasons people would have a whole life policy is the savings aspect of it. Amazingly enough, about half of Americans aren't saving any money. I'm sure that you are aware of there being a high percentage of people who don't save much. Maybe you know some of those people. Maybe you are one of those people. Maybe you're just struggling to live everyday life. It is expensive out there. Inflation is through the roof these days. And so it is just hard for people to save money. But one of the safest places to save your money is a whole life policy. And in fact, back in the day, people used to save into whole life policies all the time. It was very common. It was one of the most common places people did save their money up until the 80s when interest rates were really growing and getting higher than people were looking for other places to save their money and kind of went away from the normal place, which was considered normal, saving into their whole life policy. A third use for IBC, or third reason someone would want to have a whole life policy structured in the way of IBC, structured as an IBC policy, is to recapture debt. Now, what does that really mean to recapture debt? Well, if you have debt with credit cards, loans, student loans, any location that you have debt in an outside institution, if you would like to pay that off with your whole life policy, you would basically be moving that debt from an outside bank, outside of your system, into your banking system. So the debt doesn't technically go away. You've relocated it from an outside bank to your system, and now you have control of that debt. Another win when you do that is, of course, your credit looks amazing because you just paid off your debt. And so moving your debt from outside banks to your banking system does help your credit score and does give you complete control over that debt. You can now decide what amount you want to pay yourself back. You can move the exact payment that you were already used to making and repay that to your banking system, or you can change it. But just think, if you are a co-owner of a lending institution, the whole life insurance company, over a long period of time, you're going to receive a portion of the earnings of that institution simply because you're a co-owner. So you are a co-owner on your life insurance policy with the life insurance company. And now when you remove your debt to your system, it's like you're a co-owner of the lending institution that is lending you the money to pay off those outside debts and recapture it and move it to your system. And in your system, you're going to make money. You're going to receive earnings from that institution in the form of a dividend. So not only do you own the asset upon which you are borrowing against, you are going to receive part of the earnings of that lending instrument. And in addition, you can recapture your debt or move it to your whole life policy with a guaranteed loan rate of 4% for the rest of your life. Now, one of the great things about one of the primary companies that I do work with is that you can actually go back and forth with your loan rate. You can go from the guaranteed rate of 4% to a variable rate. So you might want to find out what the variable rate is if you're thinking about doing that. If you choose the variable rate on your whole life policy when you're borrowing, your dividend will be slightly higher than if you're choosing the fixed rate. However, that variable loan rate might be a lot higher and you might not want to pay that higher loan rate. So you always have the option to take your fixed rate of 4%. And you can switch back and forth over your lifetime, although there is some detail around that. It's not just super, super easy, but it is easy enough. Now, this loan rate that I'm speaking about of 4% wasn't always 4% for all contracts. This is something that was updated recently, maybe about a year and a half ago or so, where it became a 4% rate for new contracts. Older contracts with the same company had a 5% loan rate, but it also had a higher guaranteed interest rate or crediting rate as well. And so the rates can change over your lifetime, but on your contract, whatever rate your contract says, that rate will be guaranteed for your life. So if the company were to change rates on new contracts, that would not apply to you. Your contract has a stated loan rate and it will be that for the life of your contract. It would only be on new plans, new policies, new contracts going forward. So I have some contracts with a guaranteed loan rate of 5% and some at 4%. Now, a fourth reason that someone might want to have an IBC policy, another use of IBC, is to create passive income. Now, who doesn't want some passive income? Everybody wants to find a way to create some passive income. And what better way than with your whole life policy? You don't have to deal with renters or all the problems that come with that. Maybe some squatters. I have my father owns some property and he has had some issues with squatters. That is no fun. That is just a mess. So you're able to create passive income with your whole life policy that just once you set it, it's just going to become cash flowing in the future at some future time, and it's just going to do its thing. You don't have to do anything to it. You don't have to put any work or effort in, not like with other ways that you are creating passive income. But at the same time that your policy naturally will create passive income, you always could, again, borrow against that value and go invest in something else that creates passive income, such as real estate. You could have those two things then creating passive income for you, and really start amplifying your wealth without really any effort on your part, aside from, of course, paying the premium. A fifth reason someone might buy a whole life policy or a use of IBC would be to create generational wealth. You can create this generational wealth by buying policies on everyone. Grandma and grandpa can have a policy, the parents, the kids, the grandkids, so that as each generation passes away, that death benefit will be left to the generation below them, and they can create additional policies with that, and it will end up creating generational wealth because the death benefit is always going to be larger than the amount of cash you have in your policy. So you can have a policy on the different generations of your family, and then as the grandparents pass away, the parents, and we're getting bigger and bigger pools of cash from which to build additional policies. When Nelson Nash passed away, the author of Becoming Your Own Banker and The Case for IBC and some other books, when he passed away, he had 37 policies and his family will never have to see a bank again. A sixth use for IBC would be for business owners who can buy or would like to buy policies for their key employees or to use it as a deferred compensation plan for their employees. Also, they might use whole life insurance, which is a good idea, to use it to fund their buy-sell agreements rather than just have a buy-sell agreement without any funding. That's not going to be great. And of course, term insurance can be used for that and would help address some of the buy-sell agreement, but not the totality of it. And then the seventh reason, really, your imagination. What can you imagine? What can you think of that you could use an IBC policy for? How could it improve your life? How can it help bring you financial freedom? People have all kinds of creative ideas. I talk to people all the time who have new ideas, how they could use their policies and their plans. And I love to hear them and talk it out with them. So if you would like to start applying some of these uses in your life for IBC and you would like to get together, connect, and look at some of the ways we can build this sort of plan in your life for your family, and you would like to work with me as your advisor, please reach out. You can reach me at Valerie@alphaomegawealth.com. I look forward to connecting with you. I hope that you do reach out and we get to connect. And I hope that you have a great week. Until next time, take care.
This is thepodcastfactory.com.